Today is an anomaly. The streaming works. Past 2 days. Oof, look at this pimple. Nothing on my face, but that must be the pimple. Fuck me. Anyways, purpose of this stream quickly is to goodness, this thing takes so fucking long. Okay, well, first let's go to Forex Factory. What I wanted to focus on here is if we, for example, look at let's go to last week. I think I can still do. If we look at the, I think I can even go as late as Tuesday, the 11th. If I go on the, I'll do the 3-minute Tuesday, the 11th. And this thing just sometimes it just it lags like hell. Thursday. Fucking hell, something is making me itch, man. And I just showered. I don't know what the fuck it is. Okay. I'm looking at pound, and this news came out at 10 a.m. So you see at 10 a.m. the news came out. It was bullish for the US dollar. Wednesday we see all bearish dollar news at 3:30. Cool. Now if I change back to this chart over here, then I can see, so this was 10 a.m. and first thing you notice is the buy side on top here, which is formed post 8:30, and then if you look at sell side, gee, what the fuck is that? You see all these relative equal lows here, but firstly this low I feel like it was formed in conjunction with this. I don't believe this low is lower than the other one. Oh shit, actually, so then this low here, this then is the lowest point. Cool, whatever. So the best way to approach this day, say if I'm trading pound USD, I say to myself, you know what, no, I'm not going to do anything related to the dollar until this news comes out. It's just going to cause a bunch of shit. News comes out, we trade back lower, and the beauty is that now you've got this fair value gap here. And just for the sake of ICT, he always speaks about the first fair value gap made after 9:30, which can be considered, let's just do it like this. Well, not can be considered, it is this fair value gap. And this is buy side. So after you get this 10 o'clock open, right here, it makes these exact lows. I really wouldn't consider this a mitigation block just because of this massive bottom wick. We trade back lower. If we really look in this, I wonder what's showing. Oh, it's showing the whole screen. Okay, I think I can do like a better full screen job here. Yeah, I think this is better. I need some coke. My mouth is dry as shit. So this I would not consider a bullish mitigation block run. Sole purpose of this bottom wick is way too big. Market trades back down. We run this sell side here. No inversion made here. We wait. We come down here. We do make a propulsion block here, but that's not enough confirmation to me, because me saying that I'd be longing this propulsion block here is cherry picking. to be honest with you. I would not trust this enough to get long yet. We make an inversion fair value gap. Cool. After we do that, the market trades back down into what? Propulsion block over here. Because mind you, so in this little range, this little run up, this is the lowest, and this wick high here means that the sole focus should be here. And also because it formed a swing point. This high is higher than this one, and this one. That becomes a discount. Well, it's a form of premium wick now. I consider a discount because the market's reaching into a discount in order to go long. You see, notice how after we get the close, we trade first to the consequent encroachment level, which is shy of the other quarterly level, and then we trade just to the high, and then we get one more revisit of the inversion fair value gap here. So if the initial long, I would say, only came at, let's say you say, cool, like you don't, here there's an initial 0.25% risk because only trying to risk 1%, sorry, 0.5% total on the account. All right. So this is your initial trade of 0.25, or I guess my initial trade here would, if I get a calculator out of my phone, I'll just call that 2.5 times 0.25%. So I would have made, just from this entry alone, 0.625% of an account, which it's not bad at all. That's the first entry. Now mind the risk to reward. The second entry, you see now, the market has formed this propulsion block here, right? So it trades back down into it. Now after doing this, you're seeing this swing point that's formed here, and it's a down close candle. The stop loss goes there. Now mind you, you only have 0.25% of risk left to play with. This one is also 2.5 R. But in total, if you just multiply the other one by 2, that's 1.25%. Now, this is considering every initial entry is only 0.25 in order so that the total risk is then only 0.5%. Obviously, if you wanted to risk 1% of the account per trade, it would just mean more money, because then you can do, say, 0.5% here. 2.5 R, you make 1.25. So basically, this 5 R trade total, you just half it. Well, actually, no, sorry. If you're risking 1%, wait, yes, I'm being stupid. The 5 R trade, you just half it because you first risk 0.5, then 0.5 again. That's total 1% risk. And then obviously, because then the luxury that then gives one is, if after, say, this initial entry of the premium wick over here, the market just dumped, then you've only lost 0.5%, and also one thing that I didn't quite specify here is I would trim this stop loss right here. If I'm willing to add here and I'm saying that I don't want it to go past this point here, I'm willing to add, or I'm willing to trim this, because I have had the 2 stop loss story before, and I saw it on some TikTok video recently. It doesn't make sense for me. If you're adding to your trade here and you're saying that the market, if it comes past this point here, your trade's being invalidated, and rather take the loss instead of some serious drawdown and all of it, then what's the difference between your initial position? But then again, maybe I'm being too serious about it. So anyways, you can just do some light tape reading here on GU. If we go to, I just want to move this to the Forex Factory screen. Over here again, so let's go to this. Okay. So I was just kind of talking about longs post this bullish dollar news, which then helped take price into sell side. So say then a day like Wednesday, where it's all bearish dollar, and say pound USD supposed is supposedly meant to be climbing. Um, let's do, so then we go to, fuck, then you quickly just go back. I'm just gonna, fuck that. Wednesday the 12th of March. Right, cool. We said there's 8:30 news meant to make this go bullish because it was bearish dollar. So what do we see? What do we see? So you see this, you get this nice 8:30 run. Price explodes higher, shoots back down. The rule is literally, if it's, so you see, yes, it does make this bearish BPR and this bearish change in the state of delivery. But when it does this, I don't want to get in for the sole purpose of this low has already been traded past. So, the bare minimum, it's just now suddenly, because now if you are selling this, your stop needs to be all the way up here. I mean, the risk to reward immediately just goes completely up. So post news comes out maybe on the 1 minute, if you're able to get, you see how this candle opens, and when this one traded back up into it, if one maybe saw, okay, that is a low risk entry, like I saw it earlier, it is possible in some markets, especially on the 1 minute time frame, where if you just decided, okay, cool, you just want to do this quick short, or if you wanted to do it from there, fair enough. But I didn't see anything worthy of taking a trade. So this day post news, the market doesn't really give anything, right? But if anything, you've just seen it deliver into relative equal lows and all. Okay. Then you get this move up higher over here. Where is it? The inversion. You see how it just wicks through, it doesn't really make it, then it makes a prop block and absolutely dumps. One thing I also said earlier is that if you are ever, whenever I find myself in a scenario where we are there in terms of price after making a propulsion block, and we might have made that prop block in a premium, so like over here, that dump lower. Sometimes the market is down here, and I actually think to myself, right? Okay, if I literally just buy it there, let's say the candle closed, and I said, well, look, it's so close to the stop loss that if it must run it, it's going to be damn near instant. And you just said that's what you're willing to risk. 3 pips, say if you got 1 pip spread or you're scared of slippage or whatever, you then opted to even do uh, you know 3.7. Look at that. Obviously this becomes extremely ambitious, and you will start taking losses. For example, I mean, look at, if obviously if you did it over here, you don't really quite get that option. But this whole style that I'm talking about is, it's okay, fine, let's just say, I mean, this one here kind of made more sense because you had the inversion, and you're wicking through it, and you made the prop block. So it dumping here, it, because your stop loss always needs to be below here. So if you manage to get a nice entry down here, then so be it. If you're entering here off the 75, in this case over here, you notice how there's no fair value gap formed here, at all. Although we make a prop block, we just kind of dump through it. But let's say you're doing high RR trading, you're kind of just trying to trade each and every single model. I mean, then you're in glory, because I mean, here at 727, you get a breaker, right? And that's where you'd be thinking to yourself, cool. If you really want to do scalping, that's your move. You get 2R. If you want to be more modest, 1.3R, and so forth. As soon as you get a model against you, you change your bias. So you see a breaker form here, you short it. You're shorting. You're taking partials. Once you get to 1.5R, you've closed 80%. Stop's gone to BE. You see this breaker form now here, bullish. You get in again if you want to. And notice how this low here, it never gets taken, and it gives off quite on spy. But the thing about trading like this is that you notice that this first formation all the way up to here takes about an hour and 6 minutes. I get impatient, or I used to get impatient. But anyway, so that's the whole news thing on like the Wednesday. So what I'm trying to just get at here is that, you know, prior to the news, getting into trades, I just don't think it's the best choice, because I always find that, the market never quite delivers cleanly enough, and then I end up getting caught pants down. I mean, just look at this. Look at this entire London session. Think of how frustrated I would have been, trying to make money in all of this, and all of a sudden, news is meant to come out on the Wednesday, and there's this run here and this run there and this run here, and I'm thinking to myself, I missed out on everything. But if you just zoom out and you just look at the price action of that, of say, because I say from 2 o'clock there up to about say 11, which is here. I can't really stand here and say that this was such amazing price action. I should have been there. I shouldn't feel FOMO for this. This is how, one gets caught with their pants down. But anyways, I just want to confirm what I think the broker for this prop firm account. It uses, it's this TXify whatever the fuck thing. Yeah, you see, Pound USD now gave off that nice sell-off I was looking for. Um, I was just never patient enough to wait for the model. I mean, I even saw the 1 hour bearish change in the state of delivery this morning, but I couldn't execute because that was my trade for the day. I had already taken my L. So if I go over to Nasdaq, I mean, this does seem like quite clear, sell side. So let me remove all this shit. Because I have time now, I'm going to go to the monthly quickly and break it down. But I'm going to play some music via the earphones, because I feel like if I play it through this, then, some shite is going to go long. It's going to go very, very long. They give me one to plug it into the computer. Actually, I love putting things into holes. Okay. Out of sight. Mike will make. Cool. This music is a bit loud here. In terms of the monthly, right? These seem like relative equalers here. This seems like long-term sell side, in all honesty. I mean, what stops the Nasdaq from coming all the way up here, all the way down here, and then once, because think of how many investors have, been buying this rally here. I mean, these have been very, very weak buying months. Yes, it's gone up, but it's been very sideways. It's not been like here. You see, I feel like this is a lot more clean in delivery. And so I probably trust this 14,000 level to hold on Nasdaq. Again, I never know for sure. I'd say a kind of a roadblock for it would be here. I mean, if I go into the 3-month short, you've got this unfold gap here. So, it's been climbing quite a bit. So sells, I guess, they ought to be expected, but people kind of forget. Sorry, I just want to see if I can see the whole. I mean, look at the curved stuff. Fucking 3,000 point scare. So yeah, I mean, I probably do see some sort of correction here to the downside. And I believe that this monthly low as well will become a draw liquidity for April. Um, so, I mean, like, say this month here, as long as it, I mean, here was already a bearish change in the state of delivery here on the monthly. I mean, damn, let's say, let's go to the 4 hour quickly. I mean, March just, you see that there? That could have been a whole, damn near 2000 handle run, a point run using a monthly bearish change in the state of delivery. And all you had to do to be there was just, you know what was going on. For example, I might argue, because I was saying this earlier in a voice note recording I was making, this candle here, extend its low left, or it's close because it's the middle candle of a SIBI. You see how this candlestick here made this inversion fair value gap because it was first a busy. It closes past it. Once it does that, yes, this candle, I mean, you only know that this is a SIBI once this one closes. Why would I not want to be going long into the SIBI here? If I think of it now, obviously hindsight is is a motherfucker, whatever. Barring the sell side, let's say I was so zoomed in, I didn't even see this, right? This is how I've learned to pick up on breakaway gaps. It's for the sole purpose is that the middle candle here, it made an inversion fair value gap. When that happens, the BSC likely does not get filled. Let me find an example. Mind you, obviously, a draw on liquidity helps. But mind you, when I say inversion, I just mean like the inversion here. If the second candle, say if this second candle here traded down past through these lows, then I would probably then expect this gap to be traded to. I just want to find more examples here on the 4 hour. Look at here, 1, 2, 3, look left. Same thing, 2 o'clock, Monday the 24th, she runs lower. 2 o'clock, Monday the 25th, after this inversion. Sorry, Thursday the 27th. Doesn't trade into the gap, runs lower. Same correlation, over here, over here. If we went a bit higher, one can argue this 1, 2, and 3 candles here, this middle one made an inversion, correct. But like I said, this one already traded through the low. It's gone through the low here already. So just anticipate a pullback, which it does give you here. This one here, regarding this BSC, this 1, 2, and 3, the low is all the way down here. Where is it? So I mean, see how, I mean, after like these candles close, so once this third one closes, this is your chance. That run up, many people are looking for that fill. That's where you short. So let's try and find some more. In theory, this middle candle here, this one did make an inversion fair value gap. With this point here, but look where it makes it. Now we're talking about, so see, it opens here, well close here because mind you now it's Friday. Look at this low. In theory, 1, 2, and 3 candles. It's this low here. Market magically opens here. Now you feel like cool. Mind you, it didn't make an inversion fair value gap of this over here. So I'm not looking for this low here. Additionally, I don't think I'm taking trades at Friday past. Uh, I mean, I wouldn't hold trades over the weekend. It's just not my style. Fuck, my wrist hurts, man. Traffic is stay plan, that was the escape plan. My hand was the getting, that shit was a waste months away. Um, mm-hmm, mm-hmm, smaller case of it. Let's remove all this other shit. I mustn't swear, man. Aye. 1, 2, and 3 candles. It makes this inversion here. Watch it. Once this candle here forms, it's confirmed that you're looking for a move down. Like, don't expect an immediate run up until some low has been taken out. So now when you look at this low like this, when you look at this one, think of it. I'm sure on the 1 hour, I probably can't go back. Well, let's try this. Monday, 10th of Feb, 6 o'clock or 6 a.m. Monday, 10th of Feb. I can. Aha, you see here, it is fucking sell side. So that's why you'd expect it. Now, once you see it, even here, once you see these lows get traded to, now, someone who's uninformed now, say on the 4 hour, I'm still trying to force a move lower. What happens here? What am I trying to do? Now, I didn't mark that 4 hour. Okay, wait, let's do this. Long story short, now after you get this move into the sell side, that gap now, that now becomes a drawn liquidity, which is somewhere up here. Let me just look on the 4 hour again. Over here. Sorry, so we'll skip that whole inversion. And now that point there, let's go 1 hour quickly, go there. After we come to this first sell side, maybe we don't expect the second one to get traded to. That's where we get long. Now I can't go back with this free plan that far. But anyways, that's enough yappa about this. That's my whole thing now about the breakaway gaps. Because again, this morning it was confirmed on GU. You telling me you falling out of love for me? Why could you find someone to love you better than I do? Taking memories and love and treating it like constant. Memories and love and treating it like nothing. Man, Future was a G, but he still is. Alarm. You got me falling out of love. It's breaking my heart in two. I just wanna make it big. What gap is this that I marked here? Oh, today's only Tuesday, and you're telling me that the market's moved all the way down here. Bomber clot. You telling me you falling out of love for me? Alright. On the 4 hour, as audacious as it is, This is the goal, homie. Now, not the immediate goal. If Nasdaq wants to fucking crumble into the ground and do whatever the fuck, sure thing. But I do not believe so. Alright, let's do this. Let's remove this quickly. I'm getting too excited now. Oh my days. My lats are so fucking sore. In terms of the weekly, alright, this is the gap. We have two weekly unfold fair value gaps here. Alright. If I look left here, right, with this candlestick, let me mark this busy here. We didn't make an inversion with the second one. And even this low here wasn't close past. So that doesn't give me hope that this is going to be a breakaway gap. Just, reiterating what I was saying earlier. Then you've got this fair value gap here as well, right? So yes, it's possible that the previous week low could be sell side, but I think when the market wants to attack this point of sell side, then we would have seen an inversion fair value gap within these formations, but that didn't take place here. So it gives me more hope for that. I want to see this weekly gap traded to. Now for a day like today, it's very ambitious to expect a 400-point move, especially on a Tuesday. But yeah, so we know weekly SIBI target. In terms of the daily, we've made an inversion fair value gap already. So we know this is the weekly. So this is weekly busy. This one has already become a daily inversion fair value gap. We'll make the color red. Okay. And if anything, this is, well, now this is a shit way to do it. This is PDH. So mind you, so this is the draw here. So ideally, after price is traded into this down close candle. Now, obviously, tomorrow with FOMC, you might just see it fucking dump down or shoot up or do whatever the fuck happens. But we've got a daily inversion there. The 4-hour, we've wicked through this SIBI entirely, which is my indication of higher prices are wanted at some point. But I will not ignore this, I would believe, from a premium wick, now discount wick. We might trade up, we might trade down to its consequent encroachment. In terms of the 4 hours, so that's the higher time frame so far. 4-hour, we've also got this massive wick, which was an immediate rebalance, as you can see. Then over here, we just traded it down and shot up. So yeah, regarding the 1 hour, this point of sell side is not bad. This Monday 11 o'clock low. Take it or leave it. I see as well, this level could hold. We could, get that ideal push up. What I was talking about was if this can be used as an inversion fair value gap, it would be brilliant on the 15-minute. Because granted, 8:30 we saw a sweep of, pre-market lows here. And this also just seems like a good point in regards to buy side here. I'll just call this a relative equal highs. So I just want to now get the previous day settlement price. We're in March, I'd say March 17th. First. Previous day settlement price. And I forgot to do midnight. A 1 minute model, a buy model already would have been this inversion BPR setup right here. Um, so entry right there, stop loss target is right above here. This technically is a very good buy model where I would have gotten in right from here. So I mean, previous estimate is all the way there. So, and I'm seeing the relative equal highs above here. But then again, what is the rule? So this would be the model 24 to 1 minute. If I didn't care about 9:30 open, and this happens at 9:30 or whatever, I would take it. But because it's not 9:30, I need to forfeit this trade and sit on my hands for the next 21 minutes or so. Why is it just playing this race scrimmage shit, bro? It's got to also. Well, not shit. I actually like race scrimmage, honestly, but yeah, also because I'm getting in trouble with the 1 minute too often. Oh, this is even a 3 minute bullish change in the state of delivery. So these longs, oh, they are nice, and you're right below midnight open. But hey, okay, which never was, never ever shoot below the neck. I'm a rookie. I'm a vet. That's why I got a Glock. You got to take these checkers. These checks. I thought I'm a party with the kids. I curve Tiffany for Jess. Gotta get a love, get it on me. And I don't know this one as well. In bikini. Hmm. Yeah, I'm a crowd hitter. I'm a crowd getter. I. So again, why wouldn't I take this trade? It's before 9:30. Um, massive bottom wicks here. Yes, there's an inversion with a prop block, but if the market can have clean candles like this over here, it should be able to do it when I want or when my model presents itself. I don't do no bottles after shots. I got 10 freaky girls in a yacht. Too much clothing. No, mind you, like I did see Longzi and all, you know, but now we've got to tackle. We want to see how will we use this. Ideally, I want to see IFG. Um, I mean, the 5 minute has only just given the prop lock now, so it also could be set up to, you know, make a prop lock inversion, trade back down, and then hopefully we buy up into that buy side that I was referring to there. But again, 9:30 is actually quite unpredictable. So sometimes it does just spike a bit lower. So want to wait for the settlement price. If I see 9:30 kind of say open and say run to clear this low, for example, and it gets way down here, I would consider that as that this buy model here is still active, and I would just farm a 1 to 11. Sounds absolutely fucking ridiculous, but I'll do it. I won't obviously go all the way, but even if 9:30, ideally 9:30 should just open below the net opening price, because if it's there and then at least the consequent encroachment of that opening range gap will be near these relative equal highs on top here. So, what if I can't get a very good risk to reward and I need to be content with a 1 to 2 or whatever the same here? I hope don't lose my guard. So, just need to wait for this brightness is actually fairly high. Just 12 more minutes and then this market and stuff would be good. Fuck it. I'm gonna go warm up some food, then come back and whenever this is done doing whatever it's doing, make this shit. This 3 minute buy is indeed still active. Um, because you only get out here and it hasn't formed a well, it hasn't traded past these lows down here. But obviously I just want to see where 9 o'clock opens. Well, clearly we know it's going to be way down here. It's below midnight opening price like we wanted. It's a good time to go long, but I'm waiting. So there's the open. Is it going to run lower? It runs lower. All right, all right. So now this is. Oh, wait. How big is this gap? Between the 930 price and the previous day settlement price, the gap is 135 points. In the ICT video I watched, it says that if this gap is more than 120 points, do not expect an immediate return to it. We'll call this the opening range gap low, and this is the opening range gap high. So, which is kind of wait and see. It's as well, mind you, if you quickly just go to the 15 minute too. Um, this is still south side here. I mean, there's some below here. Monday is the 17th. Uh, in terms of the PM session low over here. So then there's still that other south side I saw there in the 15-minute time frame. But all I can do now is just wait it out, see what the market wants to do. Um, no 1 minute conversions or any of that shit. Sticking to the 3 minutes. So you see that. And what's actually hilarious is that at already 7 o'clock, I wanted to take shorts into Nasdaq. I I wanted to take Nasdaq shorts over here after it closed at 8:30. I mean, this was just the 6 o'clock low, and this low just played it perfect sell side. And then I got a prop lock here and all of it. But this is the stuff of where you're like, it wouldn't be bad to start getting into things like that. Um, Wonder how the 2 minute will close. I can't see the 2 minute on TradingView, but I can see it on my phone. So if it can give me an inversion fair value gap, or actually ideally a bullish PPR, I will buy that bitch. And yeah, don't have much risk available for the day, to be honest. Let's see. Look, the next 1 minute candle, I just needed to just go a bit lower. I wanted to give time to allow for this inversion fair value gap to fall. I mean, because if the 2 minute closes, that's not going to be ideal because then there will not be an inversion. Uh, all right. Actually, I think okay. So a gap is no longer possible in the 2 minute time frame. Price is already traded past the high. Okay, this is good. As long as we have this nice opening range gap, the daily, so I think this is a premium wick trading down into this lower, so the discount would go with coming back down to this quarterly level. We've still got this unfilled fair value gap over here. If the market just chooses to plummet, there's still this sell side down here that it might want to deliver to. Um, so yeah, I don't mind. I now just have either a nice target for now or a nice target for the PM session. Because I've got relatively good highs here on the 15 minute, and I've got a nice opening stop. So it would be very nice and far away from midnight opening price. Again, it's only if the model really just forms and it's complete perfection. If it isn't, what can I do? Let me just finish making the sandwich.